Everyone? Okay. So my voice is clear. So a black body day, what does it show? Say another example I'm giving with figures. That this shows the stock has a high of say 602. The opening was 595. The stock made a high of 602, but it could not sustain that 602, nor could it sustain the open. The close was say around 565 and the low was 550. So what does it show? It shows that the stock has closed below where it had opened. A stock which closes below where it has opened is a sign of weakness. It shows that the stock was in the bear's hand the whole day, could not sustain the high and the open, and ultimately closed near the low of the day. Yeah, very nice, very nice. Yes, it's a downtrend. Now let's move on and understand how to use candlesticks down. Yeah, it's not exactly a downtrend, but it shows that there was a lot of weakness in that stock. Yes, a part of downtrend, and the stock could not sustain the high and the open. It's a sign of weakness. What is the closing time in day trading? Closing time for cash market, it's 3:30. For commodities, it's 5. Sorry, for currency, it's 5. Okay. For weekly trading, again, it's the same. The Friday 3:30 is the weekly closing day. And monthly, it depends. The last day of the month, sometimes the last day may be a Sunday. In that case, the Friday will be considered. Clear? So that is a psychology which is shown. See, bullish, bearish, Victor, clear? So let's understand the candlestick pattern. Some very, very powerful candlestick patterns. The hammer and the hanging man. Now it's the same pattern but in a different zone. What does the hammer or a hanging man mean? The hammer means that there is a long lower tail. Okay, the lower tail is very, very long. Long means the real body is small, and on the upper side of the candlestick there is no upper tail or very, very negligible upper tail. Okay, let's do this with an example. Example will help you. Okay, okay, good, very nice. Let's move on. That hammer and hanging man, the color is, it's the same pattern but in a different trend. So the color of the hammer is not important. It can be a white hammer, it can be a black hammer, but the shape of the hammer is very, very important. How? Let's understand that here when we are talking about the hammer has a no upper tail. So if I take an example, say I'll take the example of the first one here. So the stock here means that the stock has a particular opening. At opening is, just hold on. The opening, say, of the stock was here. The opening was 212. After the stock opened at this zone, the low was at say 186. This is the 186. This is 212. After that, the stock closed around, say, 225. Okay. So 225 is the high of the day, and the high is also 225. The closing point is also 225. So when it's a green hammer, it means that the closing and or a white hammer, I can say, the closing and the high are almost the same point. So we have a small real body, and the small real body is on the higher side. There is a long tail on the lower side. The tail is twice or more than twice the size of the real body. That is important. Please make a note. Okay. The more the lower tail is longer, the better hammer it is. Similarly, in this case, it's a black hammer. So that means maybe the stock had opened, say, around 175. Let's take an example here. It's a 175. The high was 175. The stock had opened also at 175. The stock closed, say, around 150. And 150 is the closing. So the closing was lower than the opening. So it's a black hammer. The low is, say, around 120. So the low is much lower than the real body of that particular hammer. So hammer is a very, very powerful reversal pattern. When after a downtrend, this particular shape of candlestick happens, then it says that there could be a reversal from here. Now there are two concepts in technical analysis. One is reversal pattern, one is continuation pattern. When I talk about reversal pattern, it means reversal from downtrend to uptrend or from uptrend to downtrend. So it's called a hammer when it happens after a downtrend. It shows that that particular stock could move or give a bounce back from here on. So if you want to buy the stock, you can buy the second day. You have found that this is a hammer. Now next day you take a position. If the high of this particular day is broken, that means the hammer day. You can buy it keeping the low of the hammer day as stop loss. Clear? Everyone? Reply me on the chat. Are you understanding? I'm going slowly, that's why. Once more? Okay, let's understand. That suppose this is, you can see my cursors. Okay, suppose this is a hammer day. The hammer day means this is particular day. Any confirmation, the high of the second day for a hammer day has to be, if it's a buy, the high of the hammer day has to be broken. And if it's a same thing is called a hanging man when it's after an uptrend. It shows that the stock could fall from here. In that case, let's take an example here. In that case, what you do is you wait for confirmation. That means this is the hammer. Hammer is on the lower side. This is the hanging man. So the hanging man low has to be broken the next day. If it doesn't, if the low is breached first, it can't happen. The low is your stop loss. Then you can't take a position. It's not a proper hammer. If it's a hammer, though low, it should not be broken. The low will be maintained for some time. But if it's broken the next day itself, the chances are that it's a false hammer. Now you have to go with this. Technical analysis is not foolproof. It does go wrong at times. But it does give you a very, very good opportunity to buy and sell for short term. When it's a hanging man, the same pattern, the color is not important. As I told you, it can be a black here, it can be a white here. But the important thing is the low of this hanging man has to be broken either next day or within 2 to 3 days. If it doesn't break within 2 to 3 days, the chances are that it's a false hanging man. Now, if you take a position on the short side, that means once the low is broken, you take a short position. You keep the high of the hammer day as stop loss. Don't keep the exact high. Say if the high is 515, maybe take a 516. If the stock is just for say 200 rupees, maybe a 200.5. So a bit more, that sometimes it might come to test that particular high and you might be stopped out. So to prevent yourself from being stopped out, just keep it a bit higher or a bit lower. So if you're selling, sell below the low, keeping the high as stop loss. Shorting. If it's a true hammer or a hanging man, it will give you move in just about a week. Within a week, the movement will start. Clear, everyone? See, this is a hanging man here. This is a hanging man. Again, a hanging man here. A hammer. When it's on the upside, it's called a hanging man. When it's on a downside, it's called a hammer. Now, I'll particularly suggest that before a hanging man or a hammer or a hanging man happens, there should be a move on one side for some days. So if a hanging man happens, before that, say there was a sharp move on the upper side in this example, and before the hammer happened, there was a sharp fall in the market. So a sharp fall and then a hammer and a sharp upside move and then a hanging man is more powerful than just being in a range or just a small range. What does a range mean? That suppose the stock is making for the last 2 weeks low of say around 505 and making a high of say around 535. So the range has become from 505 to 535. Whenever the stock starts moving towards 535, selling pressure comes and the stock starts falling. That is called a resistance level for the stock. And the 505, whenever it comes, there's buying starts and the stock is not able to fall below 505. So that becomes a support zone. So let's understand the concept of support and resistance. Support is a zone where the buyers become very active and the stock starts a move on the upper side from that zone. So the chances are when it's a support price or a support zone, the stock will not be able to easily break that particular price. Whenever that particular price comes, in case of Nifty index, the support, a very important support has become 7,900 for the last 2 years. So whenever Nifty comes around 7,900, Nifty starts bouncing back. The buyers come and they don't let the Nifty fall below 7,900. This is the best example recently when the demonetization happened. Again, the Nifty went till 7,900. Again, last year around March, Nifty had made a low of say 7,935. Yeah, yes, that is what support means. It's a very good example of long-term support for Nifty. And if I talk about the resistance level, can anybody tell me for Nifty, what is the recent, for so many years, the resistance level of Nifty? Anybody can? I'll tell you the answer, but before that, I want you all to tell me. Yes, very good, Prashant. Yes, it is. It is for the time being. 8,500 has been crossed. So the first resistance has been broken. Once the first resistance, again the resistance zone means the zone where the sellers become active. The stock is not able to break that particular price and move up. That is called a resistance. The best way to understand, yes, stop loss I'm going to explain you as we go on. But before that, let's understand the concept with an example. If I take a room and I say that the ceiling is the resistance, the floor is the support. That is what it means. The ceiling helps us to not move above it and the floor doesn't let us go down. Same goes for stock. So the floor is the support, the ceiling is the resistance. Once one resistance is broken, there is a tendency of a more upside move and we go for the next level of resistance. For Nifty now it is 9,000, 9,100 which has become a very important resistance level for Nifty. So once it is broken, now this is the high which was made last year, last year, and Nifty is not able to break it. Okay, but once it is broken, yes, it will take, Giri, it will take some time. It will take some time, but I'll give you the basic, how much I can teach in today's class. BSC resistance, same as Nifty. What is the highest point of BSC? All-time high of BSC. Do you know? That is the resistance level for the time being. Okay. Nifty 9,000, 9,100, BSC also same way. Now what is important is to understand that when supports are broken, it's a sign of weakness. And when the resistance is broken, it's a sign of strength for the stock. A resistance broken, so say Nifty breaks 9,000, 9,100, that is a sign that after 2 years we are breaking and making a new all-time high in Nifty. That will be a very, very positive zone, a very, very positive indication that we are going for a good bull run. Bull run means a stock moving up or the Nifty index moving up in the coming months. Similarly, if 7,900 was broken in recent times, that would have shown that probably we are going for much lower levels. Support being broken shows that the stock could break and give more lows in the coming months. Okay, what's your question? Let's understand. Now the next resistance can be done through a trend line. Okay, how do you make a trend line? That is something which you learn in the practical classes. How you just join the high points. Say I want to make a trend line or the resistance levels of this particular stock which I am talking about, right? That is the Dow Jones. Okay, what I do is I take the highest point of the first peak, the highest point of the second peak, the highest point of the third peak, and I draw a trend line. Trend line captures the trend of a particular stock. So here when I join these lines, it becomes a trend line. And this trend line gives me, even at an all-time high stock, what could be the probable resistance zone. Suppose I want to find out the support levels. I draw a trend line from the lowest low recently made, again the lowest low here, again the lowest low here. I join them and I make a trend line. So that gives me the lower support level. Is it clear, everyone? The concept of trend line. Joining the major highest high points will give me the upper resistance line, and joining the recent lower lows, the lows recently made from where there was a bounce back, if I join them, that will give me the support zone. Clear? The trend line, lower trend line will be my support in an uptrending stock, and the higher trend line will be my resistance in an uptrending stock. Clear, everyone? Can we move on? Okay. Now let's understand the inverted hammer. Just like the hammer we saw, let's understand the opposite shape of that hammer. This is called an inverted hammer. When inverted hammer, what is the criteria of inverted hammer? It has a small real body on the lower side of the candle. In a hammer, it was on the upper side of the candle, but here it's on the lower side. I can, but not in this class. Let's first cover off all the topics. Before you go into understanding trading, it's better that we first understand how to take trades. If you don't understand how to take trades, just understanding the Nifty stock movements will not help. So if we cover the topics, then we can go on and understand the Nifty movements. Is it okay, Giri? So first we understand what is inverted hammer, then we will understand that how to take position based on inverted hammer. Okay? So inverted hammer is just the opposite of hammer. It has a lower real body, a small real body. The upper long tail is twice or more than twice of the real body. And now what happens here is this inverted hammer is a sign that the stock could change the trend. So if it was a downtrend, it could go for an uptrend. Let's take an example in this case of inverted hammer. Here, since it's a white one, so let's take an example. The stock had opened at a price of 404. The low was also the same price. The inverted hammer doesn't have a lower tail. It's a very, very negligible. Even if it is there, it's very, very negligible, very minute. Okay. And so here the stock had made a low of 404, and even the low and the opening is the same price. The closing say is around 420. The high is say around 480. So there was a very big high. The stock could not sustain, but the stock has closed above the low and the particular open of the day. Since the closing is higher, that's why it's a green candle. The color is not that important, but important is the shape. Shape is very, very important. Take care of that. Okay. Same, it's called a shooting star when it happens after an uptrend. So after an uptrend, if same condition, this same shape happens, it's called a shooting star. When it's in a downtrend, it's called an inverted hammer. So rather than just understanding the name, understanding or training your eyes to see these patterns will give you a lot of help, believe me, in your trading. I do myself do trade, short-term, long-term investments, I do all, even till now. So that shows that it is very, very worthwhile to understand how, as you learn and as you read books and understand more of technical analysis, you will be able to understand how these particular patterns are very, very powerful to you. Let's understand this example. Same thing, but the color, as I told you, is not important. Here it's a black one. Here it's a white one. The shape is important. There is no lower tail and a long, long upper tail. And the real body is a small one. So it has happened after a strong move from here till here. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10th candle has given a shooting star. So a strong move and then a shooting star is very powerful. But if the stock has been in a range and that shooting star happens, it's not powerful. It might not work. For it to work, there has been a trend. Here also there was a strong move and then a shooting star. So after the shooting star has happened, how to take a trade? The next day, if the low of the shooting star is broken, you short, keeping the highest high, the shooting star high, as stop loss. Is it clear how to take a trade? Everyone, is my voice clear? Okay, you understanding how to take a shooting star trade? So if the low is broken, shooting star or after an uptrend is a negative sign. The stock might fall. So you sell below the low, keeping the high as stop loss. Okay. See what has happened from here. A massive, massive fall from here on. Okay. Now you have to keep ratios. What does ratios means? How to take a profit booking. If I'm taking a risk of 2 rupees, I should minimum get a reward of 4 rupees. So money management and profit bookings is very, very important. If I'm taking a risk of 20 rupees, I should at least get a 40 rupees to do my profit booking. More concepts will be clear as we go on. Now, what is the pattern psychology? This is an inverted hammer. Same thing, only it's after a downtrend. So if it's a downtrend, it's an inverted hammer, and then what happens? We just start bouncing back from here. Okay. Now there is a piercing pattern. There's an engulfing pattern. Let's understand that. A bearish and a bullish engulfing pattern. What does engulfing pattern mean? The engulfing pattern in this case is this is a bullish engulfing pattern. So here what happens? The first, there is a downtrend. The ticks here are showing down moves. So it's a downtrend, and maintaining the downtrend is a black candle where the closing is below the opening. So the trend of down is maintained. Now what happens the next day? Wherever the stock had closed previous day, the stock opens lower than that. So if say this price was 315, the stock opened at 305, made a low of say 300, and it could not sustain 305, nor could it sustain 300, and it ultimately closed say at 350. So previous day opening was say 340. So the stock in this whole process has covered and bounced back from today's low, bounced back from today's open, has bounced back from previous day's low, previous day's closing and previous day's opening, and the closing today is higher than all the previous lows and closes and opens. And in this whole process, the real body of day one, that is the black day, is fully covered. See, the tails is not important, but the real body of day one, that is the black day, is covered by the white body of second day. So it should be of opposite color. The first day was a black day. The second day is a white day. And this white day covers the whole of the real body of the black day. This is a very, very bullish sign. But mind you, do not take these into consideration when it's a range-bound market or a range-bound stock. The first, I'm going to say that as well. The bearish engulfing pattern. This is bullish. This is a bullish sign. That means that even though the stock had opened lower, still the stock closes. Yes, one day gap this can happen. This is the day one. This is the day two. There will not be a gap. This was day one. The second day is an engulfing pattern. You can see it when once you start learning candlesticks, you can visibly see, wow, this is a bullish engulfing pattern. And this shows that probably yes, this is a bullish one. Why? Because the stock has opened at a lower zone, could not sustain the low and the open, and has closed much higher than the open, closing, low, high of the previous day. And this whole process, it has engulfed the whole of the real body, black body of day. So it has to be a white one. This is a sign of strength that some very, very smart players. Yeah, it has to be consecutive. There cannot be a gap. No, 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 it cannot be. It has to be consecutive. The first day is a black day. It should be a long day. It cannot be a shooting star or it cannot be a doji. I'm going to make you understand doji. It cannot be a small real body. It should be a proper normal candle. So this is a proper normal candle. It cannot be a hammer or a hanging man. Okay. It has to be a proper black body, and the black body of this day is covered by the white body of the next day. How do you take a trade? Third day is when you take a trade. No, there cannot be two in green in between. No, no, no. It has to be consecutive. Clear?
Okay, ma'am, I have a question here.
Yeah, yeah. Yeah, ask me.
This has to be, yeah. So this has to be in this bullish engulfing. The first candle has to be green, right? After a downtrend, the
Downtrend cannot be a
day
green.
one candle has
Green
to
is a
be.
signal of positivity. It has to be a red one. Red, red.
Okay, so
I
this,
told
the
you green
black
or blue is
signifies red,
positivity.
right?
Yeah, it is red. And the next one is a green or a blue or a
Okay,
white. Now the colors change with
okay,
softwares. That's why I'm teaching
okay,
you all.
yeah.
Okay, when you use Metastock or you will use Falcon or Spider or some XYZ software, the colors might
Mm-hmm.
change. So the black
Mm-hmm.
shows a red, black or red. It's just two colors. But with this white one, it could be a white, it could
Yeah.
be a green, it could be a blue. So what does the blue show or a
Yeah,
green show?
actually I started.
Yeah, it's a
Okay,
positivity.
actually, I've started using the software. So
Yeah,
in that the red one signifies, there's red and green. So the red one signifies that
fall.
it is a
Yes, fall.
downtrend. Yeah,
Yeah.
and the green, yeah,
Okay,
green
now
signifies
this is all psychology, my
buying
dear.
trend. Yeah.
Psychology, you have to learn it, and once you learn, you
Okay.
will master it. Okay, so this is psychology. It shows that the bulls have come in,
Yeah.
and the stock that's why has closed at a much higher level than the previous zone.
Mm-hmm.
So how do you take a trade? You on the third day buy above the this
Mm-hmm.
candle. You buy above this candle, keeping the low of this candle as stop loss.
Mm-hmm.
The day the engulfing bullish engulfing has
Stop
happened,
loss. Okay.
yeah, the low will be a stop loss,
Mm-hmm.
and you buy above the high. Keep a
Mm-hmm.
trigger. Triggers will help you from false trades. Stop loss will be lower low of these two. Lower low, keep it lower low of
Right.
any of these two. Suppose this is
Right.
maybe this is just 300, this may be 315. Don't keep 315, keep 300 or maybe
Mm-hmm.
299.8 as your stop loss. If
Okay.
it's a correct trade, you will not be stopped out, and within a week you will start making good profits. Clear?
Right. 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 Thank you so much.
Okay, this is clear. When it's a bearish engulfing, I'll show you bearish
Yes.
engulfing as well. Let's move on because we have so much to cover in just a small session. So I have to be a bit fast. Okay. So let's understand bearish. This is just the reverse of what we have done. Here it's a uptrend. After a uptrend, it's a white candle. Understand the psychology. The stock was here down, and that's why it's a red one here, showing that the stock is maintaining the downtrend, and now the trend has changed with a green, white, or a blue one. But here it's the reverse part. Here it's a uptrend and it's a white candle. Next day, what happens? The stock opens at a higher zone, makes a higher high or the same high, but closes much lower to the open of the day, the high of the day, the open closing lower of the previous day. So it gets or wipes off all the gains it had made yesterday. And in this process, the whole of the real body, see the wigs are not, this is called the wigs or the tails. Covering the tails is not that important, but covering the real body, this is the real body between close and open. So covering the real body between open and close is very, very important. So it engulfs the whole of the real body of the previous day. This is a very, very negative sign. Whenever it happens, whether it's a monthly chart, whether it's a daily or a weekly, please take a note. It shows that the strength which was there in the stock might be weakening. The bears have come in and a lot of people who are bull have maybe booked profit. So keep a watch. If you want to short, once the bearish engulfing day low is broken, sell below the low, keeping the highest high of these two candles as stop loss. There cannot be any other candles in between. It has to be consecutive. Okay, clear everyone? See, there was a bearish engulfing pattern here. It's a bull move on the upside for some days. Real body indicates the zone between close and open. Okay. So if I'm talking about a white body, this is the open, this is the low, this is the close, this is the high. So the zone between open and close is called the real body. Okay. Shall we move on? Clear? Shall we move on to piercing pattern? Now what is a piercing pattern? Let's understand this. Piercing pattern is like a, I will say, a bullish engulfing pattern, but there is a bit of a difference. The same concept is there. It's a downtrend, a black good real body, not a shooting star or a hammer or a hanging man, but a normal black body showing the weakness of the stock. The next day the stock opens at a lower zone, makes a low here, could not sustain it, and closes at a zone which is more than the half of the real body of previous day. So this is the zone of the real body of previous black body. The half part is the middle part. When the stock closes above the half of the real body of previous day, it's not the full. If it would have closed the whole, it would have been an bullish engulfing pattern. But since it has not covered the whole of the real body of day one, but more than half of the real body of previous day, it's called a piercing pattern. Are you understanding, everyone? It's the same as the bullish engulfing. How do you take a trade? To buy above the high of this day, second day, keeping the lower low of the two as stop loss. So it's the same, but here not the whole of the real body of first day is covered, but more than half. But more than half of the real body is covered. My voice is clear to everyone? Okay. Now let's move on and understand how this engulfing pattern is the same when it's a piercing pattern. When it happens after a uptrend, the name changes. Okay, the pattern remains the same. Here it's a black and a white. In an uptrend, it will be a white and then a black. So a change in trend means whatever was happening previously, you are changing from that. So a change in pattern, here it was a downfall, a black and then a white. When it's an uptrend, it's a white. When it's an uptrend, it's a white and then it's a black. Okay, then it's called a dark cloud cover. Same, but it's the opposite candle. It's the white one first, black next. and it's called a dark cloud cover. Now there is a lot of psychology. See, this is a piercing pattern. It's a downfall. Lot of black candles here. It's a black candle. The next day, it's a white candle. Okay, volume does play a very important role. It's not that volume itself can be considered as the major play. The major play has to be the pattern, but the important thing is volume along with the pattern formation can be a very good indication that a lot of players are coming into the market to take positions on that side. So that gives you more confirmation. The price is your master, and volume, open interest, all these are only supportive rules. Okay, the volume can also happen after the move starts. So volume alone cannot be based as a foremost criteria. Foremost criteria is the pattern. See, this is a piercing pattern. Yeah, engulfing pattern, what happened? The whole of the real body of this black would have been covered by the real body of this white one. They are interrelated, they are nearby, but when the whole of the real body of day one is covered, it's called the engulfing. When but not the whole, but more than half is covered, it's called a piercing. If less than half is covered, it's not a pattern. These take a note. These are very, very important minute details, but it will help you in your trading if you know the rules. So more than half of the real body of day one covered on the upper side of a piercing pattern is a powerful tool that we can have a bounce back. Just this is one of the examples how the bounce back took place. Okay, see piercing pattern here. The real body of day one, there is a major fall, then a white body of opposite color covering more than the real body, half of the real body of day one. Again a piercing here and a bounce back. Piercing shows a sign of strength. How? The stock had moved or had opened at a lower zone than the previous day's close. Now a stock opening at a lower zone than previous day's close is a very bad sign that bears are still strong. But after being strong on the lower side and made a lower low here, a lower low than previous day. So the strength was with the bears. But once after some time, the stock started bouncing back. The stock started moving above the zone of the today's low, today's open, and also the midpoint of previous day's close and open. So that shows the sign of strength. But that doesn't mean that it has to give a upside move for that confirmation. The high has to be broken within 2 to 3 days and the lowest low has to be taken as stop loss. Okay, my voice clear and what I have taught is clear. Can we move on? See, it's a bearish engulfing pattern. The first one is there is a strong move for any reversal. There has to be a strong move on any side. So there was a strong move on the upper side from here till from 230 zone to 260 zone, and then you have on the top you have a real body covering the whole of the real body of first day. So it's a white body here and then a black one, and then see what has happened to the stock. So these can be very, very powerful signals. That is important. Now signals which to take. First, before signals to take, the softwares will give you a lot of engulfing, lot of even in a range bound stock. It will give you that this is engulfing, this is a piercing. But you have to find out of that particular group of stocks where the stock has given a particular trend for 10 to 12 days. So minimum before a engulfing pattern you can take. The stock has been in trend in a stock. My voice is there? Everybody here? Okay. So my voice is clear. So for any pattern, you have to find out the stocks. Now there will be lots of stocks giving these kind of signals, but the stock has to be in a particular move of upside or downside before a reversal can take place. So to filter out, you can say take example of 10 to 12 candles being in a particular trend. So if you go through the back 10 to 12 candles and you see the stock has been in a move on the upside or downside and then a pattern has happened, the chances are if the reversal will be positive for that. But if a stock has been range bound and then you try to find out patterns, it can give you some false signals as well. Okay, shall we move on? The bearish Harami. So the bearish Harami, Japanese Harami, it means that the stock is in a particular upside move and it's giving a white candle, which is maintaining the previous trend. So no problem here. There has been upside move, still a white candle. The problem starts when next day the stock gives an opposite color candle, which is within the real body of day one. So it's a white one first, the black one the next day, and the black one is, the black body is within the real body of white day. So it's just the opposite of engulfing patterns. The engulfing, the first day's real body was within the real body of day 2. Here, the second day real body. Yeah, any questions? This is not engulfing. Engulfing was here. Bearish engulfing was here. So the first day real white body is wholly covered by the real body of second day. But what is happening here? It's just the opposite. First day real body is this and the second day real body is within the real body of day 1. Is it clear? It's just the opposite. Everyone clear? Okay. So now what happens? This is a inside day, also inside day. Yeah, yes, it's opposite. So it's an inside day. So now what happens that how you take a trade, just having a Harami is not a very powerful signal of taking a trade. So you need to be careful. How do you take a trade? There are two ways in which you can take a trade. If you are confident that after a strong move, say at an important resistance level, say at 9,000 in Nifty, okay, you have found this particular pattern. So what you can do, below the low of this day, that means the second day, black body, you can short, keeping the highest high of the 2 days as stop loss. That can be done. If you want more confirmation, you wait for the low of these 2 days to be broken and keep the high as stop loss. That can be done. It's upon you. I will particularly say Harami, bearish Harami is not that powerful pattern, reversal pattern as an engulfing, piercing or a shooting star. These are much more powerful. But anyways, this happening at important resistance support levels at important moving averages can be very, very powerful signals. Clear everyone? This is a bearish Harami. See, this is a Harami. A body and then a real body within the real body of day 1 and then we have a fall from here. A bullish Harami is just the opposite. There is a downfall and a downtrend going on, and after the downtrend it's a black body which is maintaining the continuity of bears. But the problem starts on the day 2 when the stock gives a white candle and the white candle body, real body, is within, tails is not important, but the real body has to be within the real body of, the real body of day 2 has to be within the real body of day 1. Okay, understanding? This is again how do you take a trade? The second day, whatever is the high, above that high, you buy and keeping the lower low as stop loss. Shall we move on and understand the next topic? The evening star. How does the evening star look like? The evening star, the first, it's evening star happens. What does evening mean? Duskness, dullness. So it's a powerful reversal pattern on the lower side. Morning star, when I'm going to talk, is more about brightness. So it's uptrend. Evening star is about downtrend. It's a 3 reversal candlestick reversal pattern. The first one is a normal white candle after an uptrend. So the uptrend is going on, making new highs. Again, a white candle showing the sign of bulls being strong. No problems here. The second day is a small real body. Small real body means the open and the close is in a small zone. And the tails are also not very big. Okay. Tails is that much not important, but the real body of day 2 has to be the real body of day 2 B has to be a small real body. Now the third day, this is, and the gap, there has to be a gap between the real body of day 1 and day 2. Okay. So day 1 real body is in this zone. Day 2 real body is not in the zone within the real body of day 1. Okay. And the third day has to be a black day. That means it has to be of the opposite color to day 1. So the third day body is a black body, and the black body is of the opposite, the color of the second day. That means this is called the star. The color of the star is not that important. It can be a black, it can be a white. But the first day has to be a white body representing the prior trend. The second day can be any color. The third day has to be of the opposite color. The third day has to be of the opposite color to the first day. So it has to be a black one. No, it is not fine. It is not fine. It has to be a long black handle. It cannot be a small one. Why? I'm going to give you an example. This particular, if it's a small one, it is not covering the lot of part of trading of the day 1. But when it's a long body, black body, it shows that a lot of trading of day 1 and day 2 zone has been, smashed away, and we are on a much lower zone than day 1 and day 2. So the longer this third day candle, black candle, the more powerful it is. Okay, Shalender? Okay. So now how you do they take a trade in evening star? You sell below the low of day 3. So this is day 3 black body. If the low is covered within, is say the stock starts falling below the low of day 3 within 2 to 3 days. Now that is the maximum. If it doesn't happen within 2 to 3 days, chances are this will be a false pattern. But if it's a true pattern, the low will be broken within 1 or 2 to 3 days. Once the low is broken, keeping the star high as stop loss, you can short. Okay. And mind you, don't try to do these all in a range bound or a trading zone. When a stock is in a trading zone having no trend at all, that is called a congestion zone or a trading zone when stock is between two range. So if it is in a trend, upside or downside, try to pick or take a position after that trend has stopped. So you sell below the low, keeping the high as stop loss. Clear? Okay. Same thing. This is the evening star here. Example. That's an uptrend, a very, very strong upside move. See how the candles had moved. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And then you have a white candle and the real tails can be long, but the real body is a very small one. And the real body has to be at a gap from the real body of day 1. There may not be a gap between day 2 and day 3, but day 1 and day 2, a gap is very, very powerful. So day 3, it's a black one, a long black one. It shows chances are high that we can have a fall. If the low is broken, keep the highest stop loss and see there was a massive, massive fall from here. Okay, evening star here as well, same thing. Morning star, the same concept. When it's after a downtrend, it's called a morning star. It's a black body representing the prior trend. Then it's a small real body, and which is at a gap from the real body of day 1. The third day has to be a white one and a big one. Now how do you take a trade? You buy above the high, keeping the low of the star as stop loss. If the low of the star is not the lowest low, out of the 3, whichever is the lowest low of recent times, keep it as stop loss and buy above the high. You can have a very, very powerful upside move from here on. See an example here. Okay. But for the morning star, it's better that there is no gap here. I'll particularly say if there is a gap, it's much more powerful. But sometimes there are no gaps in between. There is a real body, black body, then there is a star, and then a white body. But it's up to you if you find that this has happened at a very important support level. So, and there is no gap between the first day and the second day real body, you can still take a chance. Okay. Now, this is a morning doji star. Is the concept of doji clear to you, all of you, or should I explain once? I'll skip. I'll explain. Okay, I'll just clear. So I'll just explain it in just brief and we can move on to moving averages. So here it is, the morning star or a doji star, same it is the concept. It's a black body, but instead of a small real body, it's a doji. Now doji means, yeah, okay, I'll explain. I'll explain. I'll explain. Doji is indecision. Now, dojis in themselves are not that powerful a pattern, but when combined with other patterns they happen, they can be very, very powerful. For example, there was a Harami pattern. Instead of a inside day, where the real body of second day is within the real body of first day, there can be a doji. Okay, again, in this case of star pattern, instead of a small candle, small real body candle, there can be a doji. That can be very, very powerful if the third day is a reversal. So doji is indecision. How does a doji look like? Let's take an example. I'm giving an example here. The stock here has made a high of, say, 202. The low is 196. Okay, and the opening was, say, around 198, and the closing is also around, say, 198.2. So that means that the opening and the closing are almost at the same point. What psychology does doji show? When the opening and the closing are almost the same, that means we have almost negligible real body. We say that this is a doji, and we have long tails. It could be a long upper tail, it could be long lower tail, it could be a cross doji, anything. But important thing is the open and the close are almost at the same point. Why it's called indecision is the reason is the stock opened, say, around 198. The stock moved till, say, around 195. Then again moved till 205, 210, 207. But the stock could neither sustain 194, 192 zone, nor could it sustain 208, 210, and closed where it had opened. So there is a fight going on between bulls and bear, both trying to fight it out and try to pull it either up or down. But neither could win today, and that's why the opening and the closing are almost at the same time. It will get closed in 10 minutes, but as much as we can cover, we will cover it. Okay. So doji shows indecision, 1 or 2 dojis on a consecutive dojis at a time, 2 to 3 days is a signal that beware there is some strong movement coming on either side. Now doji, since it's a neutral pattern, you can't say that always it has to be upside or a downside move. It can go on either side. If the high of the 2 to 3 days is broken, it could be a move on the upside. If the low is broken, it could be a downside. So is the doji clear? Can we move on?
Ma'am, I have a question.
Yeah, yeah.
Okay, in doji,
Yeah.
let's say that in the same chart, after this black candle, the doji forms, and after the doji, it's not the white candle. Okay, the
Hmm.
same pattern is not there. Let's say only the doji is there, and the after the black candle, the doji is there. So then, what will be the next candle? Will it be in? Will it form an uptrend after that, or
It
it
could be
has to
a
be the
trend.
third candle
See,
has to be
doji
the
means there
one?
could be a downtrend as well. Doji means both are fighting.
Okay.
Who will win will decide where it will go. So if it's a black candle and a doji, it could be more a downside move if the
Okay.
bears win it. But if
Okay.
it's a reversal in trend, there could be a white, just like it's a morning
Okay.
star here. It could be a morning star, and you can, third
Right.
day you don't do anything, you just keep watching. Fourth day, once the high is broken, you buy, keeping the
Okay.
doji low as stop loss. It's a calculated risk you take. And if I
Okay.
get it right, I will get a much stronger move on the other side. But if the doji happens and the low is broken
Okay. We
on
have to.
doji, it could go down.
Mm-hmm.
Okay, so we can't take
So we
decision
have to
just based
wait
on
for the
data.
volume also.
Yes, yes. You have to wait.
Okay. Okay. Okay.
And the more, once
Okay.
you
Okay.
get into trading, you will learn how to use these dojis. And suppose after this doji, again there is a doji next day.
Mm,
That's more powerful, that there is something cooking inside.
yeah.
and there could be strong movement. Just keep a watch.
Okay.
Just keep a watch. Okay, watch and keep seeing.
Okay, so we
Otherwise,
should
there's
not
no
take a
issue.
decision that time because the
No,
market is
no.
in a indecision.
Yes, yes. 2 to 3 days on a trot doji, and then a say upside move. It's a strong signal that probably the bulls have won. There could be a strong move. But a downside move, the bears have won. Keep the highest stop loss and sell below the doji
Okay.
lows. 3 of the days, whichever is the low.
Okay.
Okay. These are things you will learn as you go into trading. You read books. You will learn them.
Hmm.
Okay. So doji have got the
Thank
importance of
you.
doji. You read about it.
Yes.
Let's move on and go into the moving averages pattern study. Okay, support and support we have discussed. This is support level. We are going a bit faster so that we can cover as much as we can. Okay, this is a support level. These are support zones from where there can be a bounce back. These are resistance levels where there could be a correction from there. Okay, once this resistance is broken, see what has happened. There can be a strong move. Once the resistance is broken, it becomes the support level. And from there, the stock can move much ahead. And once the support is broken, it can become a resistance level. And from the stock can come around that and again start the fall. So support and resistance also keep changing their roles. Okay, now let's move on and learn about moving averages. We have covered these. Okay, more you can read. But before that, let's go into head and shoulders. Head and shoulders patterns. Have you read it? All of you? You have any questions here or can we skip it? Anyone, any question on head and shoulders? May skip? Okay, so let's go to moving average if you all want.